So I want to introduce you to Karen Cox, who's the CEO of the Financial Rights Legal Centre. And Karen, it was the solicitors from your centre that I contacted to support me in advocating on that case, and also the financial counselling support line. So we thank you for that work that brings the hope and the relief there. I'd also like to introduce you to the Honourable Anna Bligh, CEO of the Australian Banking Association. And on this occasion, I can say when BM went to the car yard, they actually pitched his loan to one of the big four banks. They correctly rejected it and said, no, the numbers don't stack up. Unfortunately, what the car yard did then, they pitched it to a second-tier lender who just accepted it without the numbers being there. I'd also like to introduce you to David Locke, who is the CEO and the Chief Ombudsman of the Australian Financial Complaints Authority. And in BN's story, David, when I first contacted the lender, for the first 45 days I said, oh, he can't make ends meet. Or they said, well, when is he going to pay? When is he going to pay? So we had to lodge with you guys, and it was only there that we got the resolution and that they started communicating there. And also for you, Ross, in your journalistic work and in the media places a necessary spotlight on issues such as BNs. And whilst the news doesn't always necessarily have to be negative, we know that those channels actually give people a voice and can hear what's happening out there. So we thank you. None of us are living under a mushroom, and on a daily basis we see the media and we hear about what's happening in the world. We see that we see the stories about the banks and interest rates, but we also see the stories of people who are doing what it takes to make ends meet. Tony went through the statistics earlier. And just the other one that I do want to add to it, we talk about an income-debt ratio, but what that means is people are living under immense pressure, families, relationships, and also well-being. The other thing we want to highlight is also our new start rate. Deloitte Access Economics just said it's actually our standout failure as a nation. We don't have a dole bludger problem. What we have is a society that is unnecessarily cruel. That's hard-hitting words. And on Saturday, there was another story of Peter, who is in regional Australia. He's struggling with debt, and he said, there's no light. The only light would be if I dropped dead, and that would be a lifesaver. He said, my father lived to 91. He said, God forbid, I hope I don't live to 91 because I'd be absolutely mental trying to work that out. These are the people that are connecting us. There will be an opportunity for people in the room to ask questions of the panel at the end. So if there's a burning question, please hold on to that, and we do look forward to hearing from you. My first question is to you, Ross. We're talking about poverty. Jen, can you share with me how you define poverty?
I define it the way Larissa defines it, which is the standard way in all the developed countries these days, which is to take the median household income, that is the one that's right in the middle, 50% above, 50% below, and then go half down from that. So it's half the median. Now, you can say correctly that's just an arbitrary level, and it is, but you can't deny that it's an austere measure of poverty. That anyone who's down there below half of the median has got to be doing it tough. There are other ways to calculate poverty lines which involve much more calculated much more carefully calculated things done by a guy called Professor Peter Saunders at the University of New South Wales, which involves diaries and asking people what they think's a fair thing and how much they spend on this and how much they spend on that. That's a good and very detailed way to do it, but there is absolutely nothing wrong with just adopting the standard that's adopted in all the developed countries, which is to say half the median. If you're below half the median, then there is no argument you are poor. The one thing I'd add to that, even before I became a journalist, when I was an accountant and I had a client who was a social worker, he kept banging on to me about how there's more to poverty than money. And that's true. Money is very important. But there are other dimensions of being poor. There's social exclusion. If you can not have as much money as you need, but also have good social relations, you're not doing quite as badly.
Thank you. Anna, could you share with us, please, your understanding of poverty? Thank you.
Sorry, thank you. Well, at a technical level, I'd agree with Ross that is a reasonable, definition when you're trying to maybe quantify how many people are living in poverty in a country like Australia. But I would certainly endorse the second half of his answer, that poverty, it very much is about money, but it is not only about money. And I think that there are certainly people, people in my family, people who I know, who are somewhere between that median and half. And I wouldn't say they're living in poverty, but I know that if they didn't have the support of their family, when a big bill comes or something happens, they could easily slip into it. And I think that, for me, that social exclusion point is really one of the very important things. I've got sons in their 20s and they're perfectly fine, but I know they live they're very proud of living independently. But, seriously, every time one of them has a big car bill or one of them's got a dog and there's a vet bill, if they didn't have me to come along and help just smooth out those ups and downs, they would very quickly get into a point where they might miss a rent payment or... and I think that's true for a lot of people during their 20s. It's not... But it just always is a reminder to me of just how important having other people in your life who, when there's a unexpected spike, can make the difference. Because if you have a couple of those, all the data tells us, that doesn't take, 5 weeks or 5 paydays, before people are living, potentially on reasonable incomes, they lose that job. There's not much buffer. So there's lots of Australians living in circumstances where I don't think they don't feel they're living in poverty. But if something happens to their income, they very quickly can get into a position where they're literally homeless. And, I know from the work I've done previously and not in not-for-profit organisations, just how quickly that can happen to people and how deeply shocking it is to them. And I think it was you in the video talked about that sense of shame. Just how hard it is in a relatively wealthy country for people when they fall out of that net to be able to talk about it. And I think that's one of the really powerful things about programs like Moneycare and the others like it in the broader community.
Thank you. Over to you now, Karen. We've heard a couple of definitions of poverty and Anna shared some experiences of groups that are vulnerable. Who do you see in your work as a vulnerable group?
Look, I think it's a really interesting question. I think in our work we see a whole spectrum. So we see a lot of people in very high financial stress, and we see a lot of people that I would classify as being in poverty. The difference, if I can make a really kind of quick analogy, is if I'm sitting there with, a fairly decent home-cooked meal and a red I got on special from BWS, looking at the giant pile of letters that I'm scared to open because I know they far exceed my income for the month, I'm in financial stress. If I can't afford to even get that meal or the wine to drown my sorrows and try and numb the effect of that stress, I'm definitely in poverty. And we speak to a lot of people in both those categories all the time. We get people to do feedback surveys, obviously, once we've done casework with them and ask them about a whole range of things, including the impact on their lives. And the people that I see who are definitely in poverty are those who then respond to that really deeply grateful because they can provide for themselves and their adult disabled child something other than mince and sausages as a result of the fact that a debt's been waived or that their funeral insurance has been cancelled or they've got a small refund. People who say, oh, thank goodness I can now actually go to the medical specialist bills that have been recommended to me. That is poverty. And I think just recently we've started to get a real spate of calls from regional New South Wales, not only about energy, that's been going on for a couple of years now, we've got extreme energy stress, but water. 2 calls that struck me this week, a family who were in, I think, a very small rural town down on the border of Victoria where they're renting on a rural property. The landlord supplies you with a full tank of water, but it's then your responsibility to fill it up. If it empties, their tank is now empty. The working father in the family is out of work, is struggling to get a separation certificate, hasn't been able to access any Centrelink whatsoever, so they've got no food and no water. This is real poverty.
Yeah, it's big, isn't
But
it?
just before we move on, I just like to say that I don't want to underplay the effect of financial stress, though. Financial stress is absolutely enormous, even if people do have options, but they're extremely unpalatable ones, like selling the home that they've worked for decades to try and establish. That has real impacts on people. And whereas those people may have more options than those in deep long-term poverty, the impact on the community, on those people, on their families cannot be underestimated.
No, thank you. David, through AFCA, who do you see as the most vulnerable group?
Well, I think everybody can be vulnerable, and that's something that's come out graphically today. I mean, Marilyn's story just shows that, it only takes illness, or it only takes, for people to lose their job or to retire or to have a relationship breakdown, and we can all be in this situation. And I think that's really what needs to be the story. There's so much polemic out there at the moment, whether it's about New Start or whether it's about asylum seekers or whether it's about whatever issue, really. And it seems as a society that quite often we want to blame people who are struggling rather than actually recognising that could be us, and actually having a degree of empathy and understanding what it might be like to walk in that person's shoes. We see people right across the spectrum. We see people who are in real financial hardship, and we've actually, in the first 11 months of operation, we've already had 8,000 financial difficulty cases, which is more than double what was coming before. So we can see that a lot of people are doing it tough out there. But we also see people who may be in financial stress, or who, may have been misled or treated poorly. But often what happens is there can be a whole series of consequences to some of these things. So even people who may be financially secure, actually, if something goes wrong, then you can see how, almost like dominoes, the whole thing falls. So people who may have run businesses themselves, the business may fold, they may lose their home, the relationship may break down, the children may leave, all of these sorts of things can happen. And I think it's trying to assist people in a holistic way that's so important. And that's why Moneycare, the Salvos, Good Shepherd who are here, the community legal centres such as Karen play such a vital role. I think they genuinely, and I don't believe this is over-egging it, they genuinely save lives. They genuinely keep families together. You genuinely keep relationships going. The stress that people who call us every day very often are experiencing is really real. And I know that the banks and other financial institutions are dealing with many of these people as well. So it's a common story. But I think unless you've actually been in that situation, it's very hard to understand what that might be like. But I think this can just be all-consuming for people.
Yeah, thank you, David. We've heard Marilyn's story and we've heard Bien's story. Ross, these are other people's stories, but how does their poverty affect you, or how does someone else's poverty affect me and the people in the room?
Well, that's one of the things that worries me. I think often it doesn't affect me, and people like me, people like my readers. We live pretty comfortable lives. And we live them in parts of the city where we very rarely meet poor people. Occasionally we might live near someone who has a string of mishaps, and that's often what brings people under. One thing goes wrong and then another one, and by the time you've got to the second or the third, they're in deep trouble. I'm aware of that, but I don't have a lot of personal experience of that. I think what that means is it's very easy for us to be very judgmental about people whose lives we don't know very much about. We've never walked in their shoes. We've never even thought about what it would be like to walk in their shoes. And it's very easy for us to say, well, if only they worked as hard as I do, they'd be right. Why don't they get a job? If I was unemployed, I wouldn't rest until I had a job. Well, yeah, fine. It might be a while since you've been on the labour market. There is a lack of empathy. And for some reason, there's something, Australians are good people. I'm very proud to be Australian, but there is a bad side to Australians, and one of them is this thing called downward envy, where we're supposed to be envying the people who've got more than us, but we often spend a lot more time taking it out on people who've got less than us, because somehow we convince ourselves that they're getting it easy. That if you're on the dole, you don't have to work. I have to work, but he doesn't. Well, it doesn't actually work like that. And because we have so little physical contact with people like that, that it's easy to come to these very uncharitable things. And this is where the media comes in. The most powerful way to have an effect on public opinion is to tell the stories of real live people so that you can see them, you can identify with them, and you can realise that although they may not have spent every single dollar that came their way as virtuously as they should, and I'd like to kid myself that I do, then there's something wrong with them, and that makes me less guilty about all the stuff I've got.
No, thank you.
But my point is, the politicians know full well that if the media starts telling the stories of specific individuals, people who see that will get the empathy. And that's the reason why one of the major roles of the Department of Home Affairs is to stop journalists interviewing particular asylum seekers or boat people. Because if the media were to personalise those people and their problem, there'd be a lot more public sympathy for them.
Very interesting. Lots of calls to action there, aren't there? We're just going to shift over to the Royal Commission into banking and also the Senate inquiry that happened at the recommendations came out at the beginning of the year. We've heard, through the media, the alarming number of cases, the really painful stories of people that went through there and the issues. And it seemed to be years before it was seen to be necessary to have these inquiries. So, Karen, when do you think the need for the Royal Commission and the Senate inquiry started? And, what had you been seeing that made it necessary?
Goodness me, I haven't thought about that. When did it tip over into needing a Royal Commission? I have to say I was a bit of a Royal Commission sceptic. I hate to admit that now, but I was like, we know what's wrong. Why do we have to spend so much money finding out what's wrong when we already know what the problems are? Can we just get on with fixing them? But in retrospect, I became a big convert because I think partly related to what Ross just said, what the Royal Commission did was told the stories of the people affected in ways that every single household in Australia could relate to. All of a sudden, this problem that affected other people affected all of us. And I think there was a huge amount of momentum that came out of that for change. I know that a few things that have gone through Parliament just recently were stuff we'd been arguing for 10 years on deaf ears. And then all of a sudden, oh yeah, well, that's a no-brainer. We'll just do that now. So I think it's been a slow kind of boil, the frog in the boiling water, where we're all so used to being treated this way and for financial services to be the way it was, that it took a long time for people to suddenly go, hang on a minute, yeah, this isn't acceptable. So I think that's my answer on that. What was the second part of the question?
Just what had you been seeing in the casework that made a Royal Commission necessary?
We had been seeing serious and increasingly problematic responsible lending for as long as I've been in this job. So that's going back to 2000 when I started at Consumer Credit. Lots and lots of people affected initially by credit card debt, then it spread into housing debt, and then we just got this whole spectrum of new lenders that entered the market, and unfortunately the Royal Commission focused mostly on the mainstream, and we've now got a whole sector out there who I think, if anything, have gained confidence from the fact that there wasn't a Royal Commission about them. We did have an excellent Senate inquiry, but it was very much the off-Broadway event that I think is too easily forgotten. And look, in addition to that, just simple stuff. People not being put into the right bank account so that they were just incurring fees. You used to have to go out and waste your own money. You could just sit at home and let them take it away. So I think it was hugely important. The sale of horrendously poor value products, consumer credit insurance, some funeral insurance, accident insurance. There's a whole range of stuff out there that was being just systematically sold to people with really, really poor value for consumers.
No, thank you. So these industries, banking and finance, are clearly, they're facing challenges, and we want to give you the opportunity to share from your unique perspective some insights. So Anna, from your unique perspective, I'm curious, and the Salvos are curious, what has changed since the Royal Commission's recommendations?
Thank you. Well, I think, the issue that Karen was going to there was the power of a Royal Commission to shed a lot of sunlight onto a particular area of society or the economy. And, Karen's right. Even the sort of worst or some of the things that I think really captured the public's kind of attention, things like fees for no service, that term had been coined by ASIC about 3 years, I think, earlier than the Royal Commission. ASIC had started investigating not only banks but other financial institutions in relation to that matter. They had published a report on it. That report had been published by various newspapers. So these things were not hidden or unknown, but they were published on page 17 of the Australian Financial Review. They weren't the first item on the Channel 7 News. They weren't the lead item on the FM radio stations. And when we think about how most Australians get their news, as much as I might like reading the AFR, that is not how most Australians, and if they do even read the front cover, they're very rarely getting to page 17. So I think, sorry if there's any AFR journalists here, but, in terms of, interesting that these things were not unknown, but they weren't getting the kind of attention that I think that a Royal Commission can give them. And the power of that is when, so that one is a particularly good example, because I think most of the people involved in those programs working in banks are people on relatively low to middle incomes. They are, they're not the high-flying executive teams who might have designed the product. These are people who come to work every day believing that they're doing a good job, they're supporting their families, they do what's asked of them at work, this is the business model, and everybody else in the industry is doing it. So it had become quite normalised. What a Royal Commission did was actually confront them with, when I see it through somebody else's eyes, like my grandmother's, I suddenly see it in a completely different way. So the powerful thing, there's lots of things I could list off about legislative changes, banks and the industry thinking differently, for example, about contributing financially to financial counselling, for example, which has been a long conversation, Karen, but I think it would be fair to say there's a very different view of that now than there might have been 3 years ago. There's lots of initiatives, the new banking code, etc. But I actually think one of the most powerful changes that's happened and is continuing to evolve is all of those people who work in banks, who are dealing every day with customers, having a really kind of think about, actually, what would this look, what would my grandmother think about this? Would I sell this product to my grandmother? What would this look like if this was on the front page of the paper? Being able to see it through a much broader community lens and not just thinking, this is the way it's always been done. And, that they're actually very hard changes to get in big organisations. So I think, the prospect of, would I want to be a witness, in an inquiry in 5 years' time explaining this documentation? And therefore having, second thoughts, pause for thought. The example you gave, of, is it BN, I think, where one of the major banks said, look, even without meeting him, just on the numbers, this is not something that we would want to approve. Having said that, I think there has been a lot of great work done by really good people in hardship teams in large and small banks for a long, long time. And Marilyn's story kind of went to that, and there's many other stories like that. And I know Karen and your team work with those people all the time. And it is good for those people who have, I think done some extraordinary life-changing work with their customers. It's good sometimes to hear those stories too, because they're very important. And they give, not only because it's good for those people to know that their work is recognised sometimes, but the more we talk about those stories, the more people think, well, maybe I should go and talk to my bank about this. Or maybe if I went to a financial counsellor, my bank might waive this debt or reconsider it or give me lower repayments. Or, we need to tell those stories so people know that banks do have hardship teams, that they can make a difference, that they do deal with some really difficult situations on a very regular basis.
Thank you. David, have you seen any different coming through AFCA since the recommendations of the Royal Commission, the Senate inquiry?
Well, we've definitely seen some improvements, but it's not consistent across the piece, is what I would say.
Okay.
I mean, I came into my role in June last year. I didn't come with a financial services background. I came with a lay perspective. I was pretty horrified and shocked with what I saw through the Royal Commission. For me, it was all new. But when I went into FOS, as it was, people were talking about, well, we knew about this issue, or we knew about this financial firm. And I was going, well, what the hell were you doing about it? What was going on in the context of that? So I think everybody was probably surprised by the scale of some of this, even if the issues may have been quite familiar to people. And I think, frankly, nobody came out of it well. So I don't think the Ombudsman came out of it well either. So I think it does challenge us. How do we, knowing what we know, work in a constructive way with industry and with consumer groups such as the Salvos to really address the issues and to ensure that people are being treated fairly? And we're seeing some great work going on, including in some of the big banks and some of the big financial institutions, where there really are efforts to change culture and to change practice. I think for us, the key is really improvements that are needed to the IDR process. What I want is the IDR process within financial firms to resolve much more of these issues. For people not to have to really come through to AFCA then at the end of the day. And certainly the work that ASIC have been doing, starting with the banks but moving on to the insurers, where they've been in for 6 weeks at a time, going through and auditing and making recommendations for improvement. I think that's to be welcome. And I think the issues that are coming out of that mirror the issues that we see through our experience as well. So I think the more that financial firms can actually see complaints as actually gold, the way you can identify systemic issues and improve your business, rather than just throw money at a single issue or try and resolve issues, I think the better. And we are seeing more investment in this area, and people within financial firms have often been crying out for resources. But if you're working in complaints handling, it's not a sexy part of the business. It is a cost. It's not a part of the business that generates income. So I think there has in the past been a natural tendency, for businesses, understandably, to try and reduce costs and to try and increase profit. That's the nature of the business. That's legitimate. But actually, you need investment in this area as well. And I think we are seeing more of that now, and I think that's positive. But it isn't consistent across the piece. And I'm really troubled. I'm really concerned about some of the issues that we see with payday lenders. I think we do need to get the SACS legislation, which has been sitting before Parliament for a long period of time. AFCA has talked about the importance of getting that legislation through. I do have concerns about what is being stored up for the future with buy now, pay later providers. If it's too good to be true, it probably is too good to be true. And if your business model is predicated on 25% of your income coming from default payments, then I think that is a problem. And I do think that for people in poverty, for people who are struggling to find how to put food on the table, when you walk past and you can see that you can use buy now, pay later to pay for medical fees, to pay for medical bills, to pay for food, to pay for essential things, then people, if you are desperate, are going to clearly use that. But the problem is, without protections on that, it isn't people like me that can pay that are going to suffer. It's the people most in need. So how do you ensure? And our role is to work with industry, work with people in industry, work with the regulators to ensure that financial firms do play by the rules, and if they don't, to provide redress. But what if the rules don't protect vulnerable consumers? What if the rules themselves are intrinsically unfair? And that's why we do need some of the legislative and regulatory change which is coming, and we've certainly publicly welcomed ASIC's use of their product intervention powers, which is something which I think probably everybody in the room can welcome.
Thank you. So I guess you touched on it about the complaints section being an expense to a business. I guess this is a question to you, Ross. Do we have to choose between a flourishing economy and a flourishing society? Is there a crossover? So can we lend responsibly and flourish in both areas?
Of course we don't have to. We can live comfortably. We can have businesses that make good profits, but we don't have to scrape the last dollar off the bottom of the barrel by giving credit to people who shouldn't get it and who you can be reasonably certain will have a lot of trouble handling it. I think that's true with a lot of our young people. They get credit cards and it takes them a fair while to learn just what a temptation a credit card is. I can remember some woman who worked for me, who was very well educated. She was trying to talk our pay office into paying her salary into her credit card. And they said, "Oh, sorry, we can't do that." But what that told me was that she was having trouble handling it, and she was fairly well paid, and she had a husband who was fairly well paid. I think young people have terrible trouble doing that. The thing about credit is that it's like new technology. Is new technology good or bad? That's a silly question. It's both. All these things can be used for good or ill. And credit is like fire. It can be used for good and ill. We'd be much worse off if we didn't have fire to cook our food and to heat our homes. But all of us know and have learnt, and as a species, humans have learnt, that you have to be very, very careful with fire, otherwise it'll burn your house down. Credit's the same. It's good stuff, but if it gets away, if you let it get away, it can make your life very unhappy. And to get back to your question, I will not accept for a moment that the only way we can have a prosperous economy that employs lots of people is if we take the people at the bottom and screw them.
Okay, thanks. And Anna?
Very quickly add in terms of what's changing, because I think this is really important. It goes to the point that David made, that recognition that complaints are potentially a source of gold in terms of really understanding where your business is not doing well or where something is a problem. And a number of banks, both major and non-major banks, have put in quite a lot of structural changes, including putting more money into the complaints section, but I think really importantly, really delving into very rich data rather than just sending something to the board that says we had, pick a number, 2,000 complaints last month and we've resolved 1,700 of them, but actually saying what the complaints were about and how long they took to resolve, and give some case studies and have board members sitting in on call centres. And so I think that, that data is much richer, much deeper, is going to boards as well as executive teams. At least one major bank has set up a permanent subcommittee of the board on customers and complaints and dealing with that as a very structural part of their work. A couple of other banks have put the people who are responsible ultimately for complaints across the organisation onto the executive team direct report to the CEO. So starting to really think differently about, actually that data tells us as much about what's happening in our organisation as how many sales we made last month. And I think that is, continuing that will make a powerful difference with those organisations that are taking it very seriously.
In the past 2 weeks, I've actually dealt with probably one of the most painful cases I've dealt with in my time as a financial counsellor, and this is the story of Alana. So Alana's 26 years of age. She's young, attractive, bright, and really, really caring girl. There's lots happening in her life, normal stuff for 26, but also some pretty hard stuff for her age. Works in the disability sector and loves her work. She loves caring. On the 7th of August, Alana rang her bank, which was one of the big four banks. She mentioned to the bank, she got the runaround on the phone call, just saying, I can't make ends meet. She felt so helpless and without hope on that phone call. She then had to hand the phone to her mum, Rebecca, and Beck. When Beck was saying she can't make ends meet, there's been a relationship breakdown, the only remedy that was offered to her, well, we'll give her 1 month's reprieve while her tax return gets done. I am devastated to say Alana didn't make that month. She took her own life within the month before that reprieve came through. The heartbreaking thing for Beck, the mum, one of the biggest worries on Alana's passing was how was she going to deal with this debt. To many of us in this room, this debt would not be seen as a large amount of money. So Beck went up to the local branch, because that's how we solve our problems, went to her local branch with with 2 support people. One of the support people, Fiona, said it was the most distressing 2 hours in her life. They actually got nowhere with the information they took, including a coroner's certificate. They achieved very little with the debt that they had, and then were given a brochure on how to deal with loss. How did we get there? It's a question. For me, it's a question that it's happened on all of our watch. Can I just say, for everyone in our room, we were all too hard to contact. We were all too hard to find. So I'm sharing that, and they are the real names. Rebecca gave me permission to share that because she wants it to be Lani's legacy. So that when Lanny's legacy, so that for Lanny, whenever anyone has the courage to say, I can't make ends meet, which is hard to do, that first point of contact is the very most effective point of contact. It doesn't need to go down to further lines. The bank has been very swift and sensitive to me in the approach once I've become involved, but the price and that is just far too high. The caveat from Beck and also from the Salvos is we don't want any more pain. We know there's a person that took that phone call in that organisation. We know there's a person in the branch that's had that conversation. We don't want more pain. We want constructive conversations. We know that they're going to be messy, but we're okay with the messy because in the messy is actually when we get hope. The messy conversations allow us to get that hope. And we know we're at a really unique time of change. And what do we want to be known for? Do we want to be known for the inaction we took, or do we want to be known for the action that we took? That's the question to all of us.